to another Tip and Sip. As always, I am Paul Trogdon, and with me today is my very good friend, Zach Griep with Seaside Mortgage. Today, we are going to be talking about mortgages, and I actually have a couple sensational questions to ask. So with that said, I always like to try and get the thumbnail and everything. So let's do a crazy face for the thumbnail and everything. So, what? All right, so hopefully that will be the thumbnail. If not, we'll do something a little bit, more decent later, because you are a mortgage broker and I am a realtor, and
gotta be
we're professional and proper and everything. Okay, so Zach, today I wanted to talk to you about down payments, especially in today's climate. As of recording today, we are going into the spring season of 2024. We've seen craziness over the last couple years. Rates we've seen jump from the 2.5%, 3%, 4% that things were at, jump all the way up to almost 8%. Now, let me ask you this. So my understanding has always been, and by the way, you know me, I love sitting on the front porch sipping sweet tea.
Cheers. And
most definitely, so we got some traffic coming up and down the road, so I apologize if anything gets too loud on you. But anyway, so my understanding is since they've been tracking everything, anything underneath 8% is traditionally low. Is that correct?
Yeah. If you look over the last 30 to 45 years, we're still low in regards to the history of, last 30 to 40 years of mortgages in America. So it's still low, but it's all about perspective. We were at 3s and 4s, and now it's 8, it was 8. Now we're coming down a little bit, and it's all, I think where we're at now, people are starting to get geared up, ready to buy a house. They're like, oh, we're not in 8s anymore, we're into 6s, and
okay,
ready to roll.
Well, and I've always heard the comment, what's the term? Marry the house, date the rate. So basically, that the way I understand that is, if you find the house that you want, get it, because it might not be there, because you could always refinance a year, 2 years down the road, type thing, but you're at least in the house that you want, correct?
Yeah, 100%. And I just tell people, if you love the house, go get it, because you don't know if it's ever going to come back up again. And where we're at now is that, with higher interest rates, it's less competition. So right now, you have a better chance of negotiating, finding a better deal than you will if they do go back down into 5s. And the beauty of it is that if you buy now and they do go to 5, you're not stuck in that high 6, mid 6 mortgage that you were in. You can refi into the 5s, and so you got the house and you got the lower interest payment, but you just needed to be patient. Take 6 months to a year, maybe within that higher interest rate, but you got the house that you wanted, and I don't think there's a price you can put on being in the house that you love.
No, and now that I think about it, and if you think about it, if you wait like everybody else is waiting for the interest rate to drop, then you're going out there with every other buyer that's going out there to buy the house.
Yeah. Then
the price of the house is going to go up because it's going to have multiple bids on it compared to right now. Like you said, you have a little bit more, no, I don't want to, type thing.
Yeah, you can negotiate now a little bit, and I think it's more of a buyer's market. I think so. I'd use that to your advantage.
Oh, that sounds good. So, all right. So the sensational thing that I see sometimes on YouTube and some of those quick commercials beforehand, or TikTok or shorts, is like, I could show you how to buy a house without any money down. In fact, I got paid $1 billion to sell this thing, and then they show a shack, that's worth $5 that if you blow on it, you don't even have to be the big bad wolf that's going to fall over. But with that said, let me ask you, can you make money closing on a house? I mean, have you seen where people have actually walked away? I mean, not that this is what it's about. Like I said, I'm going to talk about, putting down payments, which means usually putting money down. But, I've seen these crazy things out there. Is that even real, or is that, fake?
Yeah, so there are times when at the closing table you can get money back.
Really?
Yep, I've seen it, and here's how it works. So I just had a guy recently. He did the VA loan.
Okay.
And what happened was he put in $1,000 for his due diligence, and throughout the process, he negotiated $5,000 of seller concessions. And so at the end, at closing costs were only right around $5,000. So at closing, he got his $1,000 back in a check, which is pretty nice. So because he did a 0% down, no down payment, and the sellers paid for all of his closing costs, and so the money he put into the transaction, he got back in a check.
Nice.
So you get a house and you get your money back.
There you go.
Or make money.
There you go. All right. Well, that sounds really good. Now, outside of the fact of, having, a crazy 0% loan, and everything working out, the chakra lines and all the stars align. Alrighty then.
Yeah.
Is there a possibility of like no down payment? Is that out there?
Yeah, 100%. So VA 0% down, USDA 0% down, and FHA there is actually a 0% down program. So there's 3 programs that you can essentially bring nothing to the table. 0% down, and then if you can negotiate, like in this market now where you have the ability to negotiate seller concessions, you could come out with putting no money down at all and have the sellers pay for the closing costs. So those are 3 programs that offer 0%. Conventional, we do have a 1% down program, but the most popular one is a 3% down on conventional. So
okay,
super
all
low.
right. You just said 3% conventional. I have always heard that conventional loans, 20% is what you got. That's that 20%, And now we're seeing, here in the Wilmington market, we're almost to $400,000 being the median house price. It's a little bit less than that, but for easy math for people like me, I'm going to say 400,000 because 20% of that's $80,000. I would like to consider myself someone who saves money. Well, let's just say I am. I still don't know too many people that are packing away $80,000. So what? So is it 20%? I mean, I know that you just mentioned the 3%, but is that you have to have a credit score of 2,000 and bank account. How does the 20% versus 3%? What kind of down payment is that?
Yeah, so 20%, you gotta think about it, 20 or 30 years ago when interest rates were at 11%. And then if you don't have 20% down, then you have to pay mortgage insurance. So that payment, think about it, was probably extremely high. And so over the years with interest rates coming down, along with more mortgage insurance companies coming out to compete for your business, now it opens it up to where most people put 3% down or 5% down, and the mortgage insurance is not that much. And that's because of more mortgage insurance companies coming out, more competition, driving that price down. So to have mortgage insurance is really not a big deal anymore as much as it was 20 to 30 years ago.
Okay. So, and again, I try not to time videos so that, if you're watching this video in 2026 and everything, I'm sitting here with some white in my beard, and, I have probably some more white in my beard, 2 years down the road. But with that said, in today's climate, what kind of down payments are we seeing? And again, not that you have a crystal ball. If so, you and I need to get together. I need to find out who's going to win.
Play the lottery.
Exactly. I knew it was going to be insert football name here. Who won the Super? You can't say that anymore.
Oh.
Did you hear about that?
What?
Yeah, you can't say super duper round thing, not a plate. Yeah, I mean, now of course, my channel has all of like 5 viewers, and 2 people will see this, but to you 2 people, I don't want to get canceled off of YouTube for talking about salad bowls that are really great. Anyways,
oh goodness.
All right, we'll stop with that. All right, back to the tip and sip. So in today's climate, what kind of down payment would you say most people are looking at? Are they seriously looking at 305? I mean, I know you said that there's different programs out there, but you made a comment about one of the programs, not VA, not FHA, USDA.
Yeah.
So like here in Wilmington, there's like one small piece that even is considered USDA now here in Wilmington. So, unless you're looking to, buy in Brunswick County, Pender County, Onslow County, and again, these are all counties along with New Hanover County that I, with Sweet T Realty, can help you out with. Caldwell Banker, Seacoast Advantage. But seriously, with that said, what kind of down payment do you think people are looking at right now and maybe looking into the future?
Yeah, I think the most popular 3% down, especially first-time home buyers. They probably want to put in what I've seen is the least amount that they can do. So I've seen a lot of 3%, a lot of 5%. I've done some 1% down ones. That's a really good program if you can qualify for it. But the majority of people, 3% down, 5% down. And again, with the mortgage insurance thing, I ran a scenario on that same purchase, $400,000. You put 5% down, your mortgage insurance is only $64 a month. So that's nothing.
That's not bad.
No,
not bad at all.
So, but I see the majority of 3%, 5% down, especially now with tax season coming up. You get a tax return, your tax return back. That's your down payment, right?
That's
there.
a very good
very
point.
Close to
That's
it.
a very good point.
I think there's prime opportunity to use that money to stop renting and start owning.
Well, and again, I always like what they say about renting. You're paying. A lot of people want to go, well, I just want to rent. I don't want to have my own mortgage. But guess what? You have a mortgage. It's just not yours. You're paying someone else's mortgage with renting. So why not pay yourself? Now you were talking about some mortgage insurance and stuff like that. One of the things that I have heard, and you and I were actually talking a little bit about this earlier because I know what I've done. Will you explain it? I know this is kind of more of the rates, and we discussed a little bit more rates, and I want to hit more on down payment. But with down payment and money coming in, you hear about people talk about buying down the points. First of all, will you explain what buying down the points is, and then tell me if that's a good thing or a bad thing?
Yeah. Okay, so let's take an example of today. Let's just say it's 7.125% on a conventional loan.
Okay.
And that means you're not paying points. You're not putting extra money towards closing to get your rate down. So it's
paying
even.
Points is trying to get that interest rate down some.
Yeah. So the 7.125 is the even. So now if you're like, hey, I want to lower interest rates, let's call it 6.75. Well, the lender is going to charge you points or money out of your pocket to buy down that rate. And so at 6.75, you might pay a point, or a little bit more than a point, which could be around $5,000 to get, a half a point lower on your interest rate.
Okay.
And so that's how points work. The more money you want to buy down, the lower interest rate, but it's more money out of your pocket up front to get that lower interest rate.
So is that a good thing?
So it depends. I will say if the interest rates are going down or are expected to go down, then I would advise against doing that.
Okay.
Because like in the scenario, the 6.625, it's costing, let's just say $5,000, you're only saving, I think it's roughly $100 a month. So it's going to take you 4 years to recoup that money that you put into it. So now, if interest rates are falling, if you refinance within that 4-year time period, then you technically lost money. So buying down points is a long game.
Oh, snaps. So you can actually lose money with down payment and not... Folks, you heard it here. Forget you can make billions of dollars. Now we're saying you can lose money. Yeah. I mean, and again, I understand there's the appreciation of houses and everything.
Yeah.
But you're saying just off of the top, just with the financing side, and the reason why I wanted to ask this, and just to let you guys know the reason why I want to ask this is because whenever I bought my house, 10, 15, I'm old, years ago, we did buy down. We were like at 3.75, and I think we bought down like half a point. And so I'm sitting here going, so Zach, was I just a complete idiot? And you heard him talk about 4 years. I've been in my house more than 10 years. So I didn't refinance within that time frame or anything like that. So in that case, buying down the points made sense, and I didn't lose money. But if somebody was to do that, so in today's market, again, going into spring of 2024, knowing that we're seeing fluctuations, knowing that we've hit the 8%, we've come down to 7, we've seen 6.5, back up to 7, a little bit back and forth. You're saying right now that might not be the smartest thing to do.
Yeah, I mean, because the projection is to get back into the 5s, and so if the rate today is at 7 and you buy it down to 6.5, and if it gets down to 5 and next year, you're going to want to refi. You're going to want to get into the 5s.
Lock that in.
You're going to want to lock it in. And if you spent $3,000 to $4,000 to buy down your rate, that money's gone. So you just got to be careful with that. And so there's like every circumstance is different. But at least get to, whenever you're buying a house, at least go over the options of what that looks like, how much it is to pay to get down your rate, and see if it makes sense over the time frame you may think you're going to be in the house. But again, it's just real tricky in a market where the interest rates are going down. The likelihood of you refinancing within the next year or two is very high.
Okay. And let me say this from a standpoint of, again, like I said, Zach works with Seaside Mortgage here in Wilmington, and I know that you help people all across North Carolina and everything, but I know that Zach would be the first one to say, as I would, with what we're seeing and the market, I wouldn't say volatile, but moving as much as it's moving right now, let me put in a plug for my friend here. Use somebody local. Don't use a 1-800 so-and-so that's national. Let's just say I've seen more deals fall through with that than I have ever had issues with dealing with somebody local. And then plus also, Zach is always just a phone call away, from the standpoint of he is calling me back usually within an hour with a text message saying, hey, I'm on a call, or I'm busy right now, I'll call you back. You don't get that from the 1-800 people. You get about 5 or 6 people that you got to deal with. Then you don't know who you're supposed to be dealing with, and then they get mad at you. And it's not that I'm speaking from experience or anything. So with that said, what I love is the fact of, I'm not the richest man. I'm not the richest man, Gen A. Well, actually, Forrest Gump did end up being one of the richest men. Anyways, let's just say. Exactly. The Jenny 1, Jenny 2, Jenny 3. Anyways, what's nice is I always have people that I say in my back pocket. I have vendors that are much more than just vendors. I have good friends. If you need somebody that mows yards, I know I got a guy. So Zach actually happens to be my mortgage guy. I work with several good mortgage lenders overall because I am one of those people, you don't just, all eggs in one basket. Yep. And it's not a matter of that I don't trust Zach or anything along those lines. It's just I'm not Zach's only realtor that he works with. And that's okay that you cheat on me. Zach is a very, very busy guy, but with him being busy, he always makes time for his clients and for the realtors that he works with. And like I said, he's one of the best guys that I've been able to work with over the last 5 years. And so with down payments right now, just to kind of sum up this tip and a sip, you're saying that you're looking at about 3 to 5%. And for a lot of people, that could be a tax return. We're seeing rates possibly continue on the downward spiral right now. We're looking at 5% ish give or take, is what we're hoping to get at.
Yeah.
But anything underneath 8% is historically low.
Yeah.
And with what you're seeing right now, that 3 to 5% is really what most people would be bringing, not necessarily the 20%.
Yeah, absolutely. I think, like I said, like tax returns coming up, use that money to get into a house. That could be a good chunk of a down payment. And then again, the timing of it with being able to negotiate for sellers to pay some closing costs. This is the time to do it, is now. And again, the projection of where interest rates are heading is that, I think they're going to get it back into the 5s. That's where people that I listen to that have been doing this for 30 plus years, the trajectory is getting into the 5s. And I think that's a very real possibility. And again,
now let me stop you right there, because I've always been told you need to be the source of the source. Do you mind sharing one of those names that you listen to that's been doing this for 30 plus years? Is there a particular, like if you were to say, hey, here's a podcast or somebody that that I listen to that I suggest, who give me one of those names if that's okay.
Yeah, no, his name's Barry Habib. He has been doing this, watching mortgage interest rates for, I think it's over 30 years.
Okay.
And
so this isn't his cousin George.
Yeah.
I think it's gonna go down.
No, and I subscribe to his. He does something specifically for loan originators, and he does a video every day.
Oh wow!
Kind of talks about how the inflation, how inflation is impacting rates, where he sees inflation going, and how that's going to impact rates in the future. So right now, inflation has been high. We're all feeling the effects of it, and when inflation is high, mortgage rates go up. And so now the Fed is trying to bring inflation down, and it's slowly coming down, not as quick as they would have liked it, but again, that's their goal, to get inflation down so eggs don't cost $8 anymore.
I'm sorry. Since we took it all the way up, we're going to be the ones and be the savior and bring it back down. Well, why don't you just get out? All right, I'm going to shut up about government now. I don't care what you are.
You don't like $8 eggs?
Well, personally, I'm not a big egg person to begin with. But whenever it comes to pizza, on the other hand,
well, is McDonald's still going strong with their 99-cent like sweet tea stuff or what?
No, it's $1.29 now.
See?
It's $1.29. I'll be honest with you. Yeah, you name a place, I can tell you how much their sweet tea is. Every single place, I can tell you. I can tell you whenever it comes to sweet tea.
Yeah. So, but that's the where we're at right now, is we're watching inflation, and as inflation comes down, you're going to see mortgage rates go down, and so that is really the big key to everything, is that obviously the Fed none of us like where inflation is at. They're wanting to bring it down, and the natural kind of cause and effect of that is, as inflation comes down, mortgage rates are going to come down.
Now let me ask you this, because we kind of went to rates for a little bit, and we're talking about how high rates are. Like I said, in the spring of 2024, looking at 2026, does rates, does inflation, does any of that deal with any of the down payment that we're talking about, or we're going to still see 2 years from now, 5 years from now, 3%, 5% down payments?
Yeah, I don't see that ever changing. I feel like since I've been in the business, lenders are trying to find more creative ways to get people into houses. So I don't see that ever going away.
Okay.
At all. So that's going to be there. But again, the hard part about waiting is that the house right now might be $400,000. In 1 or 2 years, it could be $425,000.
So here's the biggest thing, folks, that I can tell you is prices of houses, because of what happened back in 2007, 2008, the market finally just kind of caught up. So we're not going to see a bubble pop, like they were, trying to say that it was happening a couple years ago. Nothing's popping. These prices are here to stay. They're just going to continue to go up. Yeah. Inflation aside, you just have, natural, you're going to make money on your house. So with that said, that's another reason why, they always say, when was the best time to buy a house? Yesterday. Exactly. So with that said, no, you're exactly right. 400 to 425. Buy the house now, because unfortunately, well, not unfortunately, houses are going to appreciate, and whenever they appreciate, where are we going to be? Are we going to see something that happened 2 years ago? That you don't know. Again, if there's a crystal ball, share it with me.
Yeah.
But so the biggest thing that I think that we can get out of this, and let me be serious about this for a second. And Zach said that you can make money by sitting down. No, I'm kidding. And again, we're going to sensationalize that all the way. It's just like, make $1 million with no money down. No. Down payments, we're looking at about 3 to 5%. And that's way lower than the 20% that I always grew up hearing. That makes a lot of sense. That sounds very doable. And again, I guess, if everything does align, that would be awesome, to where, you could have some money coming back, or, paying nothing, at the, closing table. So that sounds like a good plan. With that said, is there any other tips with down payments that you could give, or anything that you could think of?
I don't say down payment, but I think just for everybody, Paul and I, we care about each and every one of the people we work with. And maybe the time is for you to buy now, but maybe it's not because of, your situation. But I would just encourage you to reach out to him, to me, to both of us, and have a conversation if you're thinking about buying, so that we can kind of walk you through, answer all your questions. Because maybe you are on the fence, but maybe the time is now, and you just need a little bit of some guidance and some little bit push to get out there and be a homeowner. But like I said, we're not the pushy type. We're not ones to do it just to get a deal. We really care about you. We care about getting you in the right situation for you and your family. And so I just wanted to say that and just encourage listeners here to reach out to us. And we'd love to have a conversation with you.
And if it's all right, because I know I didn't discuss this with you, so I'm going to say it's okay. Down below in the description, I'm going to ask Zach to put something together, whether it's from your Seaside Mortgage or anything, that gives the description of the loan programs that you were talking about, and what percentage is out the side of them, some of the qualifications, not necessarily details, but to give you an idea, because again, one of the things that about me is I always want to make sure that my buyers, my sellers, anybody that I'm working with is informed, that what's going on, what's happening, so that it all makes sense to you. So anyway, with that said, thank you for hanging out with us for this tip and a sip. Like I said, going into the spring market 2024, give us a call and help you with what's going to make sense for you and your family moving forward. Again, don't pay somebody else's mortgage, pay your own mortgage. I think we hit on a couple different things here, but the bottom line that in all seriousness is that don't feel like owning a house is out of reach. It really isn't. And with Zach and I as a team, allow us to help you with that. So with that said, have a wonderful day. And at the end of the day, we want you sitting on your front porch sipping sweet tea.